Good morning, everybody. This is Lee Seiler, and welcome to the Seiler Wealth Management video blog. Today is Wednesday morning, January 27th, and I am doing this video blog from our new digs, our new offices here in Longwood, Florida. We made a move over the weekend, and new clients will be getting notifications as to where our location is, which is right down the street from where we were, so it's not a big deal. It's just a lot more convenient for clients. Anyway, let's talk about what went on yesterday after the close, because it was a much anticipated Apple earnings report, which is arguably the most important company in the markets right now. Okay, I mean, because it is the largest, number one, and there are a lot of questions surrounding what's going on. First of all, let's address the earnings, which are probably the most important aspect, which they did beat earnings expectations, but on the sales side, they did come down a little bit light. All right, so a little bit light on the sales. However, according to many of the analysts, I listened to the Tim Cook conference call, and many analysts said that their iPhone sales, that was a critical piece of data, but their iPhone sales came in pretty much in line. In fact, they came in at 74.8 million iPhones for the quarter. Okay, let's put that in perspective. Apple sold 34,000 iPhones every hour, 24 hours a day for 13 weeks. That's what that means. Okay, a record number. Now, these are adjusted numbers, all right? They were coming in a little bit higher. Tim Cook did say that he saw a slowdown this month in China. That's no surprise. He said that they continued their investment. He said the most of the slowdown was in Hong Kong, but the company is really trying to do other things, which I really like. So it's not all about the iPhone, iPad sales these days. They're now working on reoccurring revenue, and that's their Apple Music. That's a pretty good product, and now they are working on it to make it better. But if you have a family of 6, you can put up to 6 people on your Apple Music account, and they can download music all they want, and it's free for like $15 a month. So, I mean, they're really starting to get some traction there. But the company did say that next quarter, it's going to be they see a slowdown a little bit next quarter. However, they have new products coming out. 60% of the folks that own phones pre-iPhone 6 launch have not upgraded. So now we have an iPhone 7 we're looking forward to in September. So all in all, I mean, the company did not have a bad quarter. They did a lot of business. They have about $39 a share. Think about this. The stock trades roughly $100 plus or minus whatever pre-market numbers are today, 97. Call it $100 a share. They have $39 a share in cash. That's $216 billion in cash. So 40% of their company is sitting in a very safe investment, but not yielding much. That's the concern. So Tim Cook says that they're confident they're going to have a great year. He's confident in China. And the good news is, I think they are setting themselves up to outperform going forward. Okay, they have basically thrown out the baby with the bathwater this quarter. And they've thrown all the bad stuff out, and that's good. Sometimes when you think, hey, things are going to be as bad, let's throw it all out. Not to mention currency problems hurt them a little bit. When you are a domestic company, which some companies are not domestic anymore, they're moving overseas. That's another video blog. But the strong dollar, the rising dollar, hurts exports, and that's why you see China devaluing their currency, their yuan. That helps them. That helps their exports, and they export everything. So it hurts us. All in all, I'm not disappointed at all in Apple's numbers. In fact, I think they're getting set up for outperformance down the road. The stock is going to lag today, indicating down around $3. That'll equate about 25 points on the Dow itself. But keep in mind that this is a company with all this cash. They can do a lot of things. They could go out and buy other companies. I mean, that is a war chest full of cash. So we'll see. I think the stock is certainly not a sell down here. I think it's something that you buy on weakness if you can assume the risk, if you know it's a technology stock. Could it go lower? Yes, it can. I think that it's such a nice valuation right now that we probably will see it with the dividend payouts. We'll see them increase some dividends. You're probably going to see buybacks, more share buybacks, which is something that Wall Street likes. But I don't count them out at all. And I think going forward, the end of the year, it'll probably be higher than where it is right now. All right. We do own Apple. We own it all across the board for clients. We own it much cheaper in 95% of our cases. So we still have a double in it. Unfortunately, we had a triple in it, but it's a stock I think we can hold for the long term. It's really a good opportunity. Again, make sure it's suitable for you. Let's talk about the markets now. We've had a little bit of rally here in the markets. I don't think that the downside is over yet. Okay, oftentimes you have to have more of a whoosh downside. We did see that last week. I saw panic. I did see some panic selling. I can hear it in people's voices. I can hear it. I was talking to traders. They were kind of a little bit in a panic mode. So when I start seeing that, that tells me we're getting close. But I do think we'll have a retest of the lows we saw last week. Yes, we've had a pretty good rally, and yes, we see things looking better. But sometimes it's a sucker's rally. Certainly wouldn't go out buying on that, thinking, hey, the worst is over. I think we have another retest. And then once it retests, if it can hold, then I think we'll have that solid base to maybe start inching our way upward. We also have a Fed meeting today. Okay, a lot going on this week. Plus, not to mention a lot of earnings. But Janet Yellen will be speaking at 2 o'clock, and I am 99% confident. I would say 100, but you always have that little chance that the Fed will not raise rates. In fact, I think from the slowdown we see in China and what's going on here in our markets and the potential slowdown we have, I believe that the Fed is really not going to raise rates, certainly not the 4 times they initially said for this year. 2, maybe 3, but I don't know. It may not even be 2. Who knows? But they're not going to raise rates as many times they initially thought. I think that's also bullish. But we really want to hear her comments. Remember, when there is a dovish comment, that's positive for the economy, positive for the markets. If it's a hawkish comment, that's negative. Okay, it's like bullish, bearish, dovish, hawkish. All right. So let's see what happens today. We're indicating a little bit lower opening, and a lot of it has to do with Boeing, who came out with a not a great quarter, a Dow component, Apple, a Dow component, putting a little pressure on the Dow. But anyway, I'm Lee Seiler, and you're listening to Seiler Wealth Management Video Blog. Our newsletter is hot off the presses. It's on the website. You can sign up so you can get it right in your mailbox. You can find it on our website, stockdr.com, or you can get it emailed to you weekly. All right. I will actually drop some cruises here next week. I am kind of actually looking for my stuff still because we are a little bit disorganized since we just moved in. But anyway, it's been my pleasure bringing this to you. I will get with you either later in the week or beginning next week. You've been listening to Seiler Wealth Management. Have a great day.